first of all, sir, we have seen a strong growth of almost 15% in your top line for the quarter gone by. If you could help us understand what has been the underlying volume growth in both your domestic and the industrial paint segments.
Industrial is a little easier to explain. There are certain segments or certain industries who used to manufacture paint that have been affected by GST. And that has led to a greater demand from the organized sector. So the industrial paint company APPG has benefited by that in Q3 and Q4. Although there are some industrial segments where we supply paint that have yet not fully recovered, but overall there has been some gain due to inability of the unorganized sector to cope up with GST. Where the decorative paints is concerned, I think two things. I think it's been a good start or a good end to the year. February, March, April are months where paint demand is generally good on account of marriage season, recovery from winter, etc., etc. They're good painting periods. Generally, February to May is a sort of a second painting season in a sense. So it's been a good start to that. It's also possible that there is a little pent-up demand from the first half of the year because the offtake then was lower because of the uncertainty due to GST, etc. That's the best I can tell you. I would like a few more quarters of good growth to be able to tell you demand is always on the upswing.
Okay, sir. And also we've been listening to you quite closely over the last couple of quarters, and you have expressed your disappointment over the fact that demand has not been as good as you would like it to be. And now that we are into FY19 and a fair way into Q1, how do you see volumes panning out for the current fiscal?
So let's see 2 more quarters is my view, because the current quarter is going to be biased. Last year it was extremely weak because of GST implementation. And actually even Q3 is going to be a little skewed because we have a much later Diwali.
Okay, and clearly the higher raw material prices, they have had a negative impact on your gross margins. For the benefit of your viewers, could you tell us what are these raw materials and what are their current price versus that figure for the same quarter of last year?
So their prices, their products like titanium dioxide, I think the price increase is somewhere on between 20 and 25%. Raw material. Then you have certain monomers that we make use in water-based paints, some of which have gone up by as much as 50%. And then there are a lot of crude-based prices like solvents, etc., which have gone up by 8-10% due to the increase in crude prices in the last quarter.
Okay, so given the current environment around the input costs that we are in, do you see these margin levels sustain, and can we expect a similar performance, if not for a better performance, say over the next 3 to 4 quarters?
I think the exact translation of input cost margins we are able to cover but there are some things called fixed costs. We are a growth-oriented company, and we need to grow at good double-digit volume growth to increase margins.
Okay, and so also if you could help us understand what has been your advertising and sales promotion expense in the fourth quarter, and what would be that number as a percentage of your net sales?
See, the entire marketing expenditure, I won't be able to give it to you quarter-wise, would be closer to around 4% for the year of net sales. For the year. Quarter-wise, I will not have the figures offhand, honestly.
And is that a normal range, sir?
Between 3.7 and 4%, it fluctuates in that range.
Okay. So also your home improvement business, now that has been growing steadily quarter on quarter. How do you see this going forward, and what is your strategy here?
So we are a little encouraged by the second half of last year, where things have finally gone a little more according to plan. Because since we acquired the business, we have had a fair amount of hiccups. some initially were internal, then there were hiccups on demonetization, then GST, etc. So it didn't allow us to. But we have acquired the entire stake in the sleek kitchen business last year, and have developed a strategy to grow there. And the SS or the bath fittings business is also doing reasonably well. So since we are very small in those businesses, really speaking, we are fairly confident of being able to grow. The bath business is a little easier because it's you have comparable competitors, etc. The kitchen business is actually changing the Indian consumer from building your own kitchen to going to modular kitchen. So it's a longer journey, but probably of greater intrinsic value.
And so finally, for the last FY, we had a capex target of about 1,200 crore rupees. What will be that number for FY19? And if you can give us an update on the upcoming facilities.
So the capex for FY19 is about 1,000 crores. Most of it is or a major share is going towards the two new plants coming up. The 300,000 KL capacity at Mysuru should be commissioned in September-October 18, and 300,000 KL facility at Visakhapatnam should be commissioned in January 19.